Now, we had a really great week this week on our Discord server, and today was also an amazing day. I had really great profits today. Congratulations, everybody. Please have a great weekend ahead. I am going to run through the trades for today, analysis on the Discord server. So I'm going to run through this, share with you my thought process, run through some of the trading tips and some secrets for you to look out for so that you're able to use them trade in the future. Now, I'll be looking at Friday's trade action on the 15th of July. So before that, some market context as always. Now, you see that we gapped up significantly because of a market catalyst managed to gap us up quite significantly. We identified this level here, 380, 381. We identified this level previously as a strong resistance, and because we were opening right on the top here, this has turned into a strong support. So this was also what we were trying to look out for. So with this market context in mind, we knew that there was some form of a support here. We also knew there was going to be some form of support at this level and some resistance at this level. So everything turned out to be just like it. We were expecting more resistance here, but we never tested that. And so at least we were able to have some levels to guide us on what's the possible trading range for today. Now, as the market opened, it's very important that we don't have a bullish bias just because of this very strong pre-market action right here. Now, I will be switching between the 1-minute candle chart as well as the 5-minute candle chart. Now, as we opened early, you noticed we had a really strong rejection of this major level here. Now, when you see strong rejection like this, especially this gravestone doji here, and you have two long top wicks here. Now, this was when the Discord server at 9:37, we saw the long top wicks off the 5-minute charts to take puts of pink 383 stop. So you see, firstly, we had a really strong gravestone doji, and we had a really strong resistance level here that we had two candles worth of rejection. We have long top wicks here. Now, when there is a long top wick, wicks just means that there is a very swift rejection. So the price action was quick to push down. So wicks like that means that the price action was swifter to push us down. So these are actually really very strong indicators of a selling pressure. So if you manage to take a put here, you also are able to have a stop loss level here. So knowing that there is clear stop, this is a good trade to take. When you always take a trade, you must always be able to identify clear stop losses. Get out of your trade early if it's not going your way. So when we have defended levels like this, a very clear level, this should give you the stop loss right here. Very clear. So you should take the trade as close as the resistance level as possible. And once you take the trade, you're riding the way down. When you're riding the way down, let's take a look at a 1-minute chart, and we see the selling action continues. Now, when you're riding on the way down, if you want to be conservative and you took some puts here, now always chart a selling channel. Now, in this case, we charted the selling channel, and we were able to see that this selling channel was quite respected. So we charted the selling channel for visual aid at a 1-minute chart around 9:50. That's where we saw this particular rejection of the top trend line, but before that we had the 5-day moving average here, and so we were expecting some form of support right here. So we expected at 9:42, that's a 5-day moving average. So that you don't freak out, you're able to assess that there will be some flagging because you know there will be a pool of buyers there from the 5-day moving average that is still following the trend line down. Now, once this hits the major levels, for example, yellow, you have to take partial profits here. Now, you would have already been at least 1.5 points up. Take some partial profits here, protect your runner, adjust your stops. In this case, if you see some flagging here, I would adjust my stops here. Now, you took the trade here, you took some profits here and you adjusted your stops here, this trade is stress-free. You will always be profitable because of a good entry with clear stop losses. You identify that the next major level is where you're going to take your partial profits, and you identify where this stop will be, because this will still protect your trade because of some flagging here. So this will protect your trade on the way down. Now you can also decide to take more profits at the end of a major level here. Now don't forget, we identified this level here as a really strong support, and that is also where we exited our selling channel. Now when this structure breaks, you're expecting some sort of flagging here, and this is where I would stop all my puts right here. So at 9.49 we mentioned that this level is going to provide some level of support. Now no immediate reversals yet, but just stops and be on alert, and always take your profits. The question is, when do we take calls? Now, because we have some form of flagging here, and we know that this is a very strong area, we want to be taking calls only when yellow is a support. So at 9.56, we say that if your selling channel breaks and yellow claim a support, you can start planning for calls. And this is the reason why, because we have some form of flagging here. Now, if this is a rejection breaking through this selling channel, we will definitely see some flagging. Now, when we flag here, and if this flagging is going to be proportionate to the left shoulder, you do see you're forming some form of inverse head and shoulder pattern, which is a bullish pattern. Breaking selling channel, creating an inverse head and shoulder pattern, and with the yellow as a strong support, because we understand our levels. So at this time, and at 9.59, I say we're basing off yellow as support, and 10 we see a flagging of yellow support, and right immediately at 10 o'clock you see this crazy candle that we see here. Now this candle is worth at least $600 million worth of orders right there. Incredible volume. So some members managed to take the puts here. When this breaks, base of yellow, you take off the calls here as well. And within half an hour of the day, you're done with your trade. That's it for today. Now after that, if you take a look at SPY, now we had a small retracement for SPY, started flagging for the rest of the day for at least 5 hours, 4.5 hours. SPY was just trading within 2-point range, or strictly speaking about a 1.7 point range. Now this is known as the Friday chop, so this is what big money wants us to do, right? We were brought up to this level and we were chopping between the two yellow levels, as you can see beautifully, just a 1.7 points chop. So for Fridays, I always encourage to take your profits early, call it a day. Now when we had this large candle here, when this large candle was formed and we started to head down, now there are a few things we must take note of. Now firstly, this is a $600 million order. This is huge, very huge volume. And when there was momentum and we started trading downwards, so when we look at the 5-minute chart, we see this rejection. Now when this candle comes in, you have to quickly take your profits if you were in calls of yellow support. Otherwise, don't enter a trade like that, because this is going to have a lot of volatility unless you're a momentum trader and you take puts right after you see this 2.5 point candle, because you know there will be immediate sellers as it reaches a new high of day in a very shocking manner. And this is actually a good momentum trade, but it doesn't happen very often. If you manage to take puts in a large green candle up, you are going to have an incredible fill. It'll be as if you're taking puts at this level because of this incredible fill. So you're going to have such a great price in, and immediately there will be immediate sellers because of the shock of entering above this high of day area, and you're going to enjoy your profits immediately from here. Now you notice the rejection brought us back below this pink level again. And this pink level was previously very strongly defended. And we see the defense again here, where we have long top wicks right here. Now, it was here that we noticed there was some imbalance right here. Now, this is known as an ascending wedge pattern. So we noticed that there was an ascending wedge pattern in the Discord server, and we called on to play puts of this pink 383 at 10:09, which was about this time right here, because we noticed this had some supply here. We identified this as some sort of supply zone, and indeed we saw that there was very strong defense of this pink here, and we were able to have a very clear stop loss either at this pink or above at this yellow. And we have to observe the price action then, and we noticed that there was this really strong ascending wedge pattern. Now, in an ascending wedge pattern, as I've explained before, because you have a strong resistance, your sellers are going to be selling at this fixed price, but the buyers are buying up at a higher price, and this just means that the volume is going to start reducing. Buyers always want to buy at a lower price, so when you see buyers buying up at a higher price, the natural assumption is that the volume is going to be reduced. Now, take a look here. If the volume profile is going to be constant, it means that the buyers will be diminished, and there will be some form of balancing of the sellers. Sellers will prevail. Why? Because they are always selling at the same price, but buyers are buying at a higher rate. So this will be the natural assumption, that buyers will be diminished if the volume remains constant or reduced. So in this case, we know that there will be some form of selling right from level, and indeed this happened. We had this large selling. Now let's take a look at the 1 minute candle. It will be much clearer. So right here, this was the wedge here. Then we started selling off. Now this is not too significant. I think this is about 1.3 points. Yeah. Now this balances the structure, because you notice it fulfilled its selling up till the end of the range here. So this move and this structure has already been balanced. So if you're planning to take puts here, you need to know where are your stops. In this case, is strong resistance. Now you are assured that because buyers are buying at a higher price, that this may prevail as long as the volume is kept constant. So you're willing to take puts here with clear stop loss here. Now, where is your first profit target? Your first profit target must be at the bottom of this range where the structure is balanced. Now, buyers were willing to buy up to this low price here in this structure. So if you go any lower, there will be new buyers at a lower price level. And especially when we had this candle here. Now don't forget, we have a $600 million order here. Now this is just an estimate, but it's to represent the scale of this volume of this candle. So you can imagine that there are buyers that were caught with queued orders here that are still not filled. And if we know the range right here of our structure, and the puts came down and we retested a new level, which was a very strong volume here. These are stranded orders. They have not been filled yet, and this is the reason why immediately once we tested at this level, buyers went straight up. So I warned this in the Discord. I mentioned that at 10:12 here, I said that the 609 million candle was not engulfed yet. And this means that the buyers will reside at a lower price level from that candle. And this was at 10:13. So at 10:13, which was here, right at its top here. And I warned that this part here, there will be buyers at this level, which was true, because immediately once we tested at this level, we sprouted right up. Buyers gained strength. You notice an increase in volume from here and breached through that yellow level here. Now, after this, you notice there is a very clear buying channel here. And once the buying channel broke, Now there's an opportunity because we are at the high of day, and we are able to take some puts from the high of day here because we were flagging longer than usual. Now at this point here, the chop has started, right? So we are bouncing off very key levels here, as you can see, right? When you have reliable levels, it's just easier to trade. I have another buying channel here that broke. Now at this point, when you notice that the buying channel, so always be drawing visual guide like this. This will be your first line of defense. You'll be able to understand the behavior of the buyers in this case. So if they broke the channel, you know that there will be more sellers than buyers. So we're trying to find a reversal structure from here. So the bulls will have to be flagging and to find a way to breach through this very important level. Now, but this flag is longer than it should. And I always tell members, if you have your flag here, where your flag is more than 2 times the length of your flag shaft here, then you have something called an overextended flag. Now when your flag is overextended, it will most probably start to have some imbalance here. Now this is when around 11:47 I mentioned, at 11:47 I mentioned that this bull flag is overextended. It may head down with some supply. Don't underestimate the Friday chop. You're capable of chopping to power hour, and that's actually what happened, right? We chopped all the way 1.7 points all the way to power hour. Now it just happens on Fridays, right? So you have to be prepared for your trade. At this point in here, we were overextended. This bull flag is not moving. The bulls are not rallying enough buyers to retest the high. So we decided to take some puts here. Well, always take your partial profits, your quick profits here. Well, in this case, we moved about 1.5 points, and that's more than enough profits. So take a decisive trade or leave a runner, and this runner will be cut out as soon as possible here. Now, from then on, it's impossible to trade properly after the chop starts. So when this time comes on Friday, you have to exit your positions and just call it a day and enjoy your weekend. It's just not possible to be trading in this environment. You can of course take a position here, but you've got to wait for 2 hours before you see 1 point move. It's just not worth it, especially when your options will be decayed. It's just not worth the returns. So a rule of thumb that on Friday PM sessions, I always remind members that on Friday PM sessions, try to not trade, take your profits early, especially the big move in the day, followed by the chop, the Friday chop. So I hope you are able to learn something from this. So thank you very much for watching, and members, I will see you back in the Discord server for another week ahead. Thank you very much for watching.